Good morning again from Forex Info US. Going to have another look today, of course, at the Euro US, which we're trading. I'm going to have a look at hourly and daily charts, and I'm going to have a look today at two technical analysis tools, MACD and moving averages. I've got this from Geoffrey Kennedy's Ultimate Technical Analysis Handbook, which is currently available free from Elliott Wave International when you sign up, which is also free. I'm finding this technical analysis handbook absolutely invaluable at the moment, and it's really interesting. So if we're looking at the euro on an hourly chart here, here's our recent upwards corrective move. I've got the wave counts here. This is way back when, and the top of high top of wave C in 5 and 5, and now we've got at the pink fractal level we've got 1 down and 2 up. I'm pretty sure this is a 0.786 retracement, the highest Fibonacci level it can go to, so I don't expect this high to be exceeded. I can see a nice 1, 2, 3, 4, 5 waves within this and a nice ABC within this. So I'm fairly confident that that wave count's going to hold up. How to use MACD to try and spot trade setups. According to Geoffrey Kennedy, he's got a couple of techniques. One of them he calls a hook, where the signal line approaches the MACD line and then reverses away. So these red arrows are pointing out hooks. There's one here and there's one here. So having a look at this one, would it have told us that a counter trend move is about to happen in a trending market? Apparently that's what it's supposed to do, and yes, it works quite nicely here. If you'd noticed this hook by this point here, you would have been ready to enter a buy and ride this up. However, in this point, if it's supposed to identify a counter trend move within a trending market, our market is trending down, and this hook here identifies a downwards movement. Okay, so that doesn't totally make sense, but it certainly does identify a movement. Okay, so he does say that it doesn't always work, and just to use it as additional confirmation, a little bit of a heads up, but don't rely on it, so that's fine. Another thing he gives us is something called zero line reversals, where the MACD and signal line approach the zero line and then move away. So the orange arrows are pointing out 3 of these. The first one here does portend a big move. Zero line reversals are supposed to indicate that something big's about to happen, and here it works quite well. However, because MACD is a trend follower and not an indicator, by the time you'd notice this, it would have been halfway through the move anyway. So it's just a little bit of additional confirmation, but not to be relied on. Works again nicely here, works again nicely here. Okay, so that's MACD from the Ultimate Technical Analysis Handbook. Let's have a look at our daily chart. Another thing, and I really like this one, another thing that he tells us you can use MACD for is to help with your wave count. Wave 3 is an extreme, so the top of wave 3 is an extreme and should correspond to an extreme on MACD. Wave 5, although it reaches a higher price, should correspond to a lower point in MACD, and indeed, so you have a divergence. Indeed, here we do. This line is trending down and this line is trending up. Really nice. This gives me additional confirmation that this wave count with the top of C and 5 here is correct. And I don't expect it to come back up here. I do expect it to turn back down. Just a little bit of additional confirmation from this technical indicator. Another thing Geoffrey tells us to use is moving averages. He says when the lines I've got averages of 13, 21 and 34 Fibonacci ratios, when they come together, it's a time of market contraction, and expansion always follows contraction. Corrective waves always follow impulse waves, as Elliott Wave teaches us. So if you use this to look here and you say, okay, well, it's contracting here, you know then it's going to expand afterwards. So you would have entered your position, and indeed it would have expanded. Works again nicely here, expanded, works again reasonably well here, and we've got a long period of contraction here. So we're hoping that it's going to expand again after this long period of contraction. So there's a couple of technical indicators to have some fun and play with. I really do advise you download that free ebook. It really is awesome. It's got a few other things in there that I haven't covered here. I'm still having to play with them. So we're expecting in the near term, let's just go back to our hourly chart. In the near term today, we've had a downwards movement last night and it's retracing up. I expect it to get up to 1.4703 today and then to turn downwards again. So that's all from Forex Info US today. Sorry about the long post. Hope you didn't mind it was too long. May all your trades be profitable and have a nice day.